what if people were trying to time the market? Because I've been hearing chatter out there like, wait a little while to buy because the rates are going to go down further in the spring. Some were thinking it was going to happen in March, and then now maybe not. So some people might be thinking, oh, I'm missing the boat. It's time to jump in now. So we might get even more people in with rates a little bit higher.
Folks, it seems like yesterday we were celebrating rates at about 6.5. Now, with a very hot inflation read, we now see rates very likely to be over 7% today. So we have been here before. We've seen rates 18 months ago break 6, then they broke 7, then they broke 8. We're now going back over 7. So I want to know, what is going to happen to the housing market? Are buyers used to it? Are sellers going to stay put? Does the lock-in effect, all of this going on? We're going to talk with Beth Traverso, top 1% national agent, and see what she is seeing in the real world. All righty, Beth, 7% rates. They are back.
Hey there. Yes, they are. So good to be back here and chat with you and everybody. We're watching it very closely, like everyone is. I think a lot of people were under the impression that rates were going to continue to go down. And so it's interesting to see, oh, wait, they're going up. And what will that do to the market? And it's too early to tell. So all we can do is just speculate, because the real estate market doesn't move as quickly as, say, stocks or other markets do. It's a delayed reaction. And so what I'm expecting is one of two possible reactions. The first one could be that it puts the brakes on things a bit, and it could slow down our spring season. Flashback to about May or so of 2022, when rates really started spiking. I remember it put a massive brake on demand. However, there's also this. Go ahead.
I remember you and I had an episode. We were talking about open houses where nobody showed up.
Yeah.
That was May of
Shocking.
2022.
And
Yeah.
sellers were really starting to panic. There was a lot of stress in the market because people that were planning on selling their home for a certain amount and anticipating that they were just, it was a given they were going to be able to do it and get multiple offers. And then all of a sudden that was not the case. And so it was a bucket of cold water being dumped on the market and people in it. So what's interesting is what I'm hearing now is that there's a lot of people who are just back in the market accepting whatever rate there is. And there is that, there's a certain urgency that people have for their life events that are going to push them to move forward regardless, as long as they can still afford it. And there still are a lot of people in my area. I'm in the greater Seattle area. There still are a lot of people here that can't afford it, even with the higher rates. So it's more, for some, it's more of a matter of trying to time the market. And that is the other side of it is, what if people were trying to time the market? Because I've been hearing chatter out there like, wait a little while to buy because the rates are going to go down further in the spring. Some were thinking it was going to happen in March, and then now maybe not. So some people might be thinking, oh, I'm missing the boat. It's time to jump in now. So we might get even more people in with rates a little bit higher.
Yeah, I've been studying the consumer for the better part of 30 years. And it's really going to be interesting because I actually think with real estate, we actually have to talk about two different consumers. So we spend a lot of time talking about demand, and we should, but let's spend a minute on supply, because you can't buy something if it ain't for sale.
Exactly.
And it feels like, and again, you're in it more than I am, at least in your area, right? I'm more national. It feels like as rates got down to 6.5, we were unlocking at least a little bit of supply. What I mean by that is the move up buyers were going, okay, I've got all this equity, I had another kid, whatever, and we're going to move up. And a move up buyer is so important for the market because it's supply for a new first time buyer, and it's going to absorb some of the stuff above the median, which is really slow. Now that rates are going up, I actually wonder if that little bit of supply that was coming, and you see the numbers, you see Alto's research talk about it, right? New listings were up, I think, 12% year on year. I wonder if that evaporates. What do you think about supply first?
It probably will restrict supply is my guess. I'm still not seeing much of an uptick in new listings yet. We've managed to close the gap in our area year over year. I'll be interested to see once February's numbers are out, how that changes if we start to get positive year over year new listings. I know our overall listing inventory is down significantly year over year, about 28% in King County, and that just shows the absorption is just really high, even if the number of new listings is the same. So it could be that move up buyer seller is still, I think, a lot of them are feeling that lock-in effect. Most of the folks that I work with that are moving up or moving out or downsizing, listing, whatever their case may be, the people that are buying and selling tend to be doing it in another area. They're selling here to move to another area. And that's a compelling enough reason for them to let go of that rate because they don't want to live in this area for whatever reason. They're moving to be closer to family. They're retiring someplace sunnier. They're going wherever, and they don't want to own their home here anymore. They want to roll that equity over. They want to not be a landlord for whatever reason. It makes perfect sense for me and you to think about, hey, maybe this house should be a rental, but there's a lot of people that just can't make that leap because of sometimes beliefs they've held or just their financial plans.
Well, again, I think a lot of people that are leaving high-priced areas like Seattle, like the Silicon Valley, they're not as price or rate sensitive because a lot of them they're taking up, bag full of money and they're
Yeah.
buying something for cash.
Mm-hmm.
Right? So the rates don't matter if you're paying cash. It's one of the oddities out there.
No. And a lot of cash buyers, we've seen a definite increase ever since rates started going up. The percentage of cash buyers just seems to be much higher than it used to be. Because even if somebody could pay cash, but if they can finance at 3, why
Yeah,
not finance at 3? You keep your cash invested in something else. That's what a
of
lot of
course.
savvy people are doing. So where I am still seeing a lot of cash buyers is the vacation and second home market is
Oh,
overwhelmingly
interesting.
cash, which is interesting because you might think that market might shrink up and really suffer in a market shift, but I'm still seeing, we're talking areas in the like mountain communities that are about an hour or so east of Seattle. Lots and lots of cash purchases there still. I've watched that market really closely
Hmm.
too. So, and I'm seeing a
I'm
fair
curious
amount of
about
them
that.
here, mostly at the higher price points.
So let me ask you about that vacation market. Again, it's an interesting area. I think a lot of areas got inundated with Airbnb, VRBO, or kind of short term, and like Palm Springs,
Yeah.
prices just went bonkers.
Yeah.
And now, because of restrictions or regulation, they're seeing huge price cuts.
Mm-hmm.
So I'm curious, are these cash buyers getting price points that I might call disrespectful, or are they just playing the asset game and paying less price and
They're
you know,
just paying the asset game, playing the asset game and
oh,
paying the price. They're purchasing in areas that are specifically designed to be
yeah,
Airbnbs. These developments were made with that in mind. So it's in an HOA that encourages it because
mm,
the association manages the rentals in a lot of those, in one area in particular where they get a huge cut. They get up to 50% of the
ooh,
proceeds. And so they're not going to let go of that.
it-
What's interesting though is seeing, I know it's kind of taking us in a different direction, but seeing that there's a massive oversupply in short-term rentals in those areas. And I think that's doing more to kill it than any kind of regulation or anything else,
okay,
because there's a huge amount of new construction being built at different price points in the area. Some might be around 700, which is kind of low for that area, up to 2-3 million on the higher end, and they're
mhm,
selling. And it seems like there's a never ending supply of new construction out there. So
wow,
it's killing the short-term rental market, but I'm not seeing any widespread regulations in those towns where they're just
okay,
prohibiting it.
yeah,
But those homes, like the $2 million, $3 million home, isn't really going to be a rental for anybody anyway. It's either
no,
going to be just a second home for someone, or they'll put it in that vacation rental pool and get a little income
mhm,
off it and just watch the asset go up in value over time is the
all right.
plan.
So we're talking about supply. I do think rates going higher, it has to bring back the lock-in. It's just
Mhm.
mathematically works that way. But now let's talk about demand. And we're going to find out because it could go either way. My sneaky suspicion is the people that are looking to buy now, they've been on a roller coaster with rates. And frankly, the only time 7% feels good is when you remember 8.
Yeah.
And 8 was like 8 weeks ago. So
Wasn't
it's
that long
still,
ago.
yeah, it's
Hmm.
still very much in the back of their mind. So I suspect if you're entering the spring selling season, you're tired of being a renter. Uh, you certainly don't like 7. You like 6.5 better. I mean, that's just it is what it is. But you also don't want 8. I'm gonna guess the demand stays active, but I could be
I'm
wrong. I
thinking
mean,
the demand stays there. We'll
yeah.
see. I'm waiting to see what happens with the bidding wars this week.
Hmm.
Today's the day. Tuesday is usually offer review day in our area. And so the bidding wars will be happening today. And so I'll be curious to see how that goes and if that shifts at all. I really don't expect that it will. I don't think it's going to, if anything, some people might say, well, instead of, this might sound terrible, but instead of 150 over, we'll bid up to 100
Yeah.
over,
Yeah, because at
or
the end
something
of the
like
day,
that.
it's a math equation, right?
Hmm.
And if you are getting a loan, a 6.5 versus 7, the payments, I don't know, it depends on the loan balance, obviously, but it's hundreds of dollars
Yeah.
depending on the size of the loan. But also you could get seller credits. I mean, it's I suspect we're both leaning the same way that the demand's not going to be crushed by 7. Because
Yeah.
again, it's not the first time. The
Yeah.
reason that May 2022 stands out to both you and I, it's when rates broke 6.
Hmm.
And it's like we hadn't been above 6 in like 4 years or something.
And it happened so quickly that it was
Bam.
complete whiplash. And so it was a massive shock to the system, unlike any I've ever seen in all my years in the business. And we're not seeing that now. There's not a sense of panic, but I do wonder if we might see a little bit more. The demand side may even increase slightly if people feel like they're starting to miss the boat. But I don't know if
Yeah.
that's going to be, I think it's been hot and I think it's going to continue to be the same hot for
Yeah.
at least the
Well,
next month
it's
or
all
two.
about supply. It's all about
Hmm.
supply. I know you talked about having a listing where I think you got like 12 offers or something
Right.
crazy like that.
Hmm.
Where what kind of supplies come on the market in the last week?
Almost nothing.
Oh my God.
So in my area, my east side buy box, there's almost nothing. And I've got one coming on the market tomorrow that I expect should be pretty popular because it's a great house at a great price point. And so that will be my test to see my boots on the ground test to
Yeah.
see how is it changing things. But I expect it's going to be just as popular. And if anything, if we don't have 12 offers and we have 9, that's fine.
Yeah.
We only need one.
You only need one.
Ideally I like more than one, but if
Yeah.
it's just one, that's okay. So I
Yeah.
always coach my sellers to be okay with, we do what we can with what the market gives us, but
Mhm.
we can't, we don't know if it's going to be a bidding war, but I'll know by next week. And I expect that will be pretty popular. I don't
Yeah.
think we're
So
going to see a huge shift.
I'm curious what again, you're a top 1% agent. You network with other like-minded and experienced and quality folks. The spring selling season has started for most of the country, right? The day after
Hmm.
the Super Bowl historically has been that day. What are other top agents saying is going on? Are they what are agents saying these
They've
days? I'm
got
just
their running shoes on, we're snapping back into that pattern. Like we kind of learn how to work in different markets depending on what is happening. And so we learn to shift to, is it multiple offers? And you have that process. Is it not multiple offers? And you have a different process. And so those of us that have our boots on the ground and we're in the thick of it day in and day out, we catch these temperature shifts from week to week. And we do network with each other and bounce things off each other. Like, what do you think about this price point in this neighborhood? What should we be expecting? And agents are always calling me asking for feedback on how things went with my pending listings, and I'm in touch with them, and so we can see what's going on. If we have buyers looking, we're asking to see what we're going to be up against, and that's just good homework. So but we're all seeing is nobody's sensing any kind of a slowdown at this point, and we're kind of
yeah,
back into that the busiest spring season that we've seen in a couple of years. So not quite like early
wow.
2022 because that was just total chaos, and not sustainable. So, and this I think probably is a little more sustainable. I don't think we're going to
Okay.
have a big up and down, but this is the time of year when we tend to see prices go up and then they start to taper off a little bit over the summertime is how
Right.
our market goes. So it looks like we're following that pattern. We'll see if 7 changes it, but I kind of don't think it will.
Yeah. The last thing to kind of ask you about is I'm really honed in on below the median and above the median, specifically 2x the median.
Hmm.
Uh, are you are you seeing the pricier stuff sit longer?
I am, yeah. There's a few more houses on the market at that upper tier price point. But we are seeing activities really heating up in those price ranges too. So in
Mm,
my area, that's around 2.5 to 3 and over.
yeah, that's
So that's
amazing.
what's where we are, you know,
Yeah.
and anything in the starter home price tier, which is up to about probably 800-900 or so or below, especially if something comes on at 650 or 7. There are still some of those out there in our area. It's just bananas, and I really feel for the first time home buyers because you get a lot of cash
Yeah.
buyers at that price point. A lot of people who are downsizing, paying cash, they're selling their more expensive home and they're buying that, or kids, grown kids buying them for their aging parents to live in.
Mhm.
If they're a small one level home, they'll just buy them cash sometimes and let their parent live there. And there's a lot of that. And so the first time buyers are up against it. But what I would say to not be so discouraging for everyone is that there are opportunities I'm seeing at all price points, and it's usually where the seller and or the agent maybe got it wrong in some way, shape, or form. It doesn't look good. There's
Bad pictures,
junk
horrible listing.
everywhere. They didn't clean off the kitchen countertop. Like the photos are terrible.
It
I
happens.
love those. Look for those ones because you will find your opportunities there, and they exist in every market. So I'm
Couldn't
seeing,
agree more.
if anything, an uptick of those. I'm seeing more where it's like for some reason they didn't pay for professional photos. For some reason they
Mm.
didn't
But
clean the
yeah,
junk out of there.
they're saving pennies and it's going
I
to cost them
know.
thousands. Yeah.
Yeah. So I'm seeing it across the board, almost every area. You just got to be very, it's easy to skip over those ones that you kind of see on
Mhm.
your search over and over and over. Just go, oh yeah, that one. But then maybe take another look at it, especially if it's on
Yeah.
the market 30 days, 60 days.
Great
They
advice.
exist and people want to dismiss them, but you really shouldn't. Because
No,
oftentimes there's
that's
nothing wrong with those houses.
yeah, that's where the opportunity could be, especially in
Hmm.
this market. Beth, you're amazing. You're a big part of the community. You're going to be in Vegas with us. But if somebody
Yeah,
wanted a referral to a 1% agent in their area, how would they reach out?
right. The easiest way to reach me is through my website, bethtraversogroup.com. And I'm looking forward to meeting people from the One Rental at a Time community down in Vegas. It's
Should
going to
be
be a
fun.
blast. Yeah.
Thank you so much.
Thanks.